Hey everyone, and welcome back to this week's edition of the Vancouver Life Podcast. And today we're sitting down with PCL's Civil Infrastructure Manager for the BC region, Mr. Ryan Andrews. And back on the podcast for a second time is the serial entrepreneur who is now the co-owner of the Penticton Speedway, served time as the COO of a construction and development company, along with spending a decade in the technology space. Mr. Ingo Seibert. Guys, welcome back to the show. Nice to have you. For today's show, again, you guys, Ryan, for example, working for PCL, you guys have a very interesting perspective on sort of the investment at the $100 million plus level that's taking place in the province, and also wanting to get sort of the serial entrepreneur version of investment as well in the province, getting an idea for our listeners, because what we've gone through in the last year and a half has been a very tumultuous time, and there's a lot of uncertainty in the marketplace. And so part of this is to get a better understanding from every level of investment to bring some certainty back to the marketplace here, so people understand that this is another business cycle. This is not the end of the world. And while it may be different from other business cycles, and Ingo, maybe you're the senior at the table here. Sorry to say that, but yeah. And with that, maybe sharing some of your perspective over the last few business cycles that we've been through, and how maybe this is a little bit different, or how maybe the ones in the past have been different. But before we get into that, maybe Ingo, let's start with you and tell us a little bit about yourself, what you've been involved in the last couple of years since we've had you on the pod, and we'll kind of take it from there.
Yeah, thanks a lot, Ryan. Thanks for having us. The last few years obviously have been interesting. COVID came along, changed some things in the world, but despite that, carried on making investments and looking forward. A big step was purchasing the Penticton Speedway with partners, my cousin Trevor and Lee Howarth and Brian Weavers. And so we opened that about 8 minutes before COVID came along, and we were allowed to have 50 people at events.
Wow.
So that was an interesting step. But, nonetheless, there's also benefits in it, because it gave us the opportunity to actually deconstruct the asset, do a bunch of renovations at a time when we weren't really concerned about having to reopen the doors for fans. So we spent 2021 and early 2022 doing major renovations and converting the asset into what we see as a long-term entertainment facility in actual fact.
Cool.
So
maybe give us an idea of what it was like in the middle of the pandemic to be deciding to put that kind of money and investment into an asset that, it was kind of proven, but not to the extent that you were trying to make of it, right?
Yeah, I think the pandemic was unpredictable, so you talk about history of things that go on. It goes back to, the dot-com crisis. So you talk about my age. I have experienced a few different cycles, obviously. The dot-com crisis, so to speak, came along, and as much as it created losses, it created opportunities, right? What people forget as you go forward with time is somebody sells, somebody buys. Effectively, they're not losses, they're transfers of dollars. Those dollars go back into a market, right? 2008, 2009 with the bank crisis, very similar. We were in development and construction at the time. So when the banks decide that they're not lending money anymore, and you're trying to develop things, but 2.5 years later, this cycle went in the other direction. So, lots of times if you're going to be in that space, you got to be really careful with the negativity, because, news media reports current negativity. That's what sells. You got to be forward looking if you're going to be into real estate development, construction, because things will change, and you got to make your own decisions on whether it's the right thing to do or what the timing is like. So,
well, in many ways, both of you guys are sort of tip of the spear when it comes to the industry, right? You guys are going out there and trying to see the trend coming and take advantage of that in many ways. And maybe, Ryan, this is probably a good time to talk a little bit about yourself and what PCL has been doing, at least regionally here in the last few years.
Sure. Yeah. I mean, quick intro to myself is I actually grew up in the States, like on a horse farm.
We'll forgive you.
Yeah. I ended up going to school for engineering and construction management and started in the industry right away, working for like a local civil contractor in the Seattle region. I quickly found my way to PCL, approximately 5 years in my career. And what really drew me to them was bigger infrastructure, bigger projects, more complexity, more responsibility, more opportunity. So switched on with them, and then I've been there for about 11 years now, and it's taken me up and down the west coast, as far north as Alaska, up into the oil fields, as far south as California, and then recently into Canada in about 2016, and into my role now since 2018. Wow. So it's taken me around quite a bit. I've typically been on the civil infrastructure side, so that's the transportation, the water infrastructure, anything related to investment into society, related to population growth or industry growth. But I've been around the residential side with lots of different colleagues in the industry throughout that whole time as well.
It's interesting because, when you talk about doing big water projects or infrastructure projects, that's in anticipation of what's coming down the pipeline for the city, right? So let's talk a little bit about some of the stuff that PCL is doing locally here, and that being in anticipation of future growth, right, ultimately, right? And then maybe let's go a little bit beyond that, because all of us have a skin in the game here when it comes to the real estate market. So why would you be investing now? What do you believe in the future? What do you see, right?
Yeah, I'd say first with PCL, so like active work that we either have right now or that we are pursuing is, I would say, all around aging infrastructure or population growth. So the large water infrastructure work that we have, and we have the biggest one in the province right now on the go, I mean, it's all centered around population growth and some environmental regulatory stuff. But I would say predominantly about expanding for increased growth around the province. Same goes for hospitals. Like you guys are probably aware, there's some serious money going into hospitals in the province.
Yeah. Aging population too.
It's aging population. It's growing populations in these specific cities cities and provinces, and then it's aging infrastructure too at some of the hospitals. So we get to see those potential opportunities probably well in advance before it actually hits the public news. Just because it's part of our business planning and whatnot. So, I mean, some of these hospitals we knew about 5, 6, 7 years ago and started putting them on our planning documents. Same with the water treatment. And like I'm looking at water treatment plants that are 10 years away.
Wow. That
I know are going to be significant investments that are all centered around population growth.
Right. So with PCL, I mean, you guys have over 1,000 projects at any given time, both in Canada, the USA, Caribbean, Australia. Through the last decade or so, or even a longer time horizon, are you seeing new trends evolving into where sort of the projects are going, where the demands are, what type of infrastructure needs to be built, and what can you kind of shed some light on?
Yeah, I would say like the typical traditional sectors have stayed strong and continue to be strong. There's new sectors that are coming on though, like renewable energy is another big one. Where it's and where you can kind of track that relative, like to make the tie to like maybe residential growth, you can track where some of those big projects are at, because it's all about getting power to communities, right? And so solar is a big one. Like we've expanded our solar group over the past 10 years, both in Canada, the US, and we've now expanded in Australia. Wow. And that's all been about cheaper, better, cleaner power. And it's all been about feeding certain communities across the U.S. and Canada. So that's a big one, I'd say. Data centers is another one where you can kind of make the connection as well. Data centers are all about flow of information to communities and people, right? And that's probably the next big trend I'd see that's coming on in the years to come, in addition to the traditional sectors that have stayed very strong.
Interesting. Can you share who builds your solar panels?
It's not Elon, is it?
It's not Elon. There's a handful of manufacturers, but most of it comes from overseas.
Okay.
Yeah.
Very cool.
So, Ingo, let's go back to you for a little bit here, and let's maybe talk about some of the tertiary markets outside of Vancouver, because I know that's a specialty of yours. And, I know we talked a little bit about making the investment in the Speedway when it seems like a ridiculous time to do it. But what were actually, come to think of it, a lot of it's always a ridiculous time to do it. I don't know if there's ever a good time. But with that said, why Penticton? Why the Okanagan?
Well, the Okanagan, as we looked at it, we actually built Area 27 in 2016. And I hadn't spent a bunch of time in the South Okanagan at that point in time, other than when I was a kid. But you could see the growth coming. And since that time, you could see the movement. You talk about an aging population, like Ryan mentioned. You could start to see people from the Lower Mainland, Calgary, Edmonton, moving into a beautiful area for retirement, taking their capital that they have earned living in those areas and buying into a place that has a pretty warm climate most of the year. Has developed, close to 200 world-class wineries. The infrastructure investments up there from entertainment. So if you look at the Penticton Convention Center and the type of shows that they put on, you look at the growth of Kelowna, who has been growing very quickly, you could see a shift in the demographics.
Right.
And the shift in demographics is, somewhat affluent. They're looking for entertainment. They're looking for exciting things to do. And it tied into the asset that we looked at, which is, a minute and a half from downtown Penticton. It's really targeting high entertainment, participation in entertainment, and exciting things to do. So, that shift is really evident if you look at the type of homes being built up there, the type of people who are looking to move up there. I think Penticton was the second most searched Airbnb market prior to COVID. And in the summer, it's very active. And I'm not sure where Kelowna is now, but it's been the second or third fastest growing city in Canada several times over the last few years.
Yeah.
So that's what made it interesting to do. Was the timing right? Timing's never perfect. I think if you're trying to time the bottom of a market, in real estate, it's just luck, so.
Well, something we always preach here is always time in the market, right? It's almost impossible. Actually, Ryan, we were talking about just before the episode started, in my place here, and you're like, hey, nice place. I'm like, yeah, well, I bought it at the top, right? And, you do the best you can at the time that you've got, right? And the circumstances that are prevailing. And so, I think bringing this full circle here, so let's talk about the future a little bit here and where we think things are going. If you look at 50% of the comments that we get on our YouTube channel, every other week when we provide a market update, it's that, well, the market is going to fall. It just hasn't happened yet. It's coming. And we've heard this story for decades in Vancouver. So I'm interested to know if this, barring... I guess the global financial crisis would probably be the next closest thing at this point to the pandemic and what's taken place. Do you guys foresee further softening in the economy? And we've heard about Google cutting jobs, we've heard about Amazon cutting jobs, but then we hear jobs reports here in Canada of adding 150,000 when they anticipated 5,000. So it sounds like to me nobody knows what the hell's going on. And these perspectives are important to hear them from you guys because you're boots on the ground, not just like us, where we see the transaction volume. You guys are seeing it from the investment side and the long-term perspective. So, Ryan, we'll start with you. Mm-hmm. Where do you think, the economy is going to be in 2 to 3 years from where it is today?
Sure. I mean, I'll my caveat to this will
be
as
best you can.
Yeah, my opinion, not a ton of factual research to this, but what I can share from my perspective is, our business has been busier than it's ever been.
Wow.
So through COVID, we poured a ton of energy in trying to study this, and we poured a ton of energy in connecting with each of our districts and trying to understand what their 3-year, 5-year outlooks looked like. That information came back that first year of COVID, and we looked at it and we thought there was going to be a bit of a dip. Mm-hmm. To our surprise, potentially, I would say that first year of COVID, we had a very strong year. And as we're coming out of COVID, we're having the best years we've had in 15 years.
Wow.
In the company. So
wow.
What that tells me is that the governments are still spending money on infrastructure. Mm-hmm. It tells me that the developers are still building and they're not planning on slowing down. Potentially, I personally think it's one of the more opportunistic times in a long time, because there is a bit of fear out there where people, I think, are a bit reserved. But
I'd say there's some significant fear.
Yeah, people are a bit reserved, but from my lens, being able to see, from that corporation standpoint of what we see and what's coming down the pipeline, looking at the big money going into infrastructure and the provinces and the states, I personally view it as an opportunity to continue buying and try to be opportunistic about it.
Well, I mean, congratulations, by the way, because Cole from our team just helped you buy an investment property. What was it about that particular opportunity that made you jump? Was it the lens that you currently see the economy through that helped you do that? Or, was it actually just a really good opportunity in and of itself?
Yeah, it was a combination of a couple things. I am one of those people that when I get something in my mind, I want to get it done. It's more of check it off the list. But, I had in my mind that I wanted to start diversifying a bit more in my investments. I do have money in PCL. I have money in different brokerage accounts, and I have some real estate as well, but I wanted to expand more into real estate. And one lesson that I learned, I would say, back in the 08-09 crisis, just like you, I bought at the high.
Yeah.
It was my very first home, and I bought at the high with a college friend, because we were just coming out of school, and I rode that wave, right? And I remembered the lesson I had for myself was next time there's a dip like this, I'm going to be ready, right? At that point in my life, I didn't have any money. Well, over the past 15 years in the industry, I've had a chance to save a bit more, so I can be a bit more opportunistic. So about that certain one, it was, it first started off me wanting to get more space for myself and my fiance.
Which is a real need.
Yeah. Which was a need, and then it was also trying to align that with best value in the market.
Yeah.
And so we started looking at a couple different places, and it just took me to where we ended up going out east a bit, to where I still thought there was good value in the price. We found a place that had a great layout, great space. It checked a lot of boxes that we had, and I mean, Cole will tell you probably, but I gave him a full list of rankings, and
he told me.
very, very particular in trying to identify what best value meant for us.
But I think that's important, right?
And that's kind of how we looked for places, and that was the criteria we used, and it allowed us to narrow it down in a specific area of the province, and that's kind of how we landed on it.
Nice. So I just want to circle back, because you mentioned something that's pretty monumental in the sense that PCL, they're building these projects that are ultimately billion-dollar decisions at some point, and those are not taken lightly, and they're not done without an immense amount of research and data and whatnot, knowing that what they're building the infrastructure for has the demand, either today or by the time it's completed ultimately. And so the question I wanted to kind of come up to here is, obviously, interest rates are putting a huge impact on builders and developers, right? We just heard yesterday, it went public about Coromandel, right? Filing for creditor protection and blaming it largely on the fact that they couldn't service their debts because when they bought their, committed to the project, it was at X rate and now it's up 400 bips or whatnot. Question for both of you, ultimately, are you seeing either personally that affecting your businesses, or are you hearing other rumblings within the industry about other developers that may be in a similar standpoint?
I can go first. I think we will see some, on the development side, both commercial and resi. I think we will see that impact some of the developers. I don't see it impacting other infrastructure spending. I think that'll continue to go up. So what that does to the market, in my opinion, is if we're still pouring money into the economy and the infrastructure, there's still going to be a demand to go buy, in my opinion.
Yeah.
But I think there's probably going to be a dip due to the interest rates, and once you start to see those come back down, I would expect those commercial and resi markets to pick back up again.
Fair. Yeah. What about you, Ingo?
I see similar things to that Ryan's talking about. It's good he goes first, so I'll know not to contradict him in any way. But I see a couple of things actually. Over the last year, I think the rates got raised in Canada 7 times, something like that. Every day opened up the newspaper, it told you, interest rates are going up and it's the end of the cycle, and prepare yourself. But you reflect back on it, you don't have to go back that far when interest rates were somewhere around 5.5%. The other thing that I see, and same disclaimer, these are just my personal thoughts, a lot of conversation is around how the inflation rates got created. But this is a unique scenario where inflation wasn't created by demand-driven scenario. It was created by a supply chain shortage that came out of COVID. You shut down the world's factories all over the place. In particular, you shut down the world's largest factory, which is China. And somewhat unreported in North America, they didn't open up mostly last year. Those factories were still producing at 50 and 40% numbers.
They still have the zero COVID policy going on.
Yeah, that's right. So you look at where the dollars come from. If you only have 200 F-150s to sell, and you've got 500 on order, you're certainly not going to lower your price. In fact, you're going to take whatever you can to keep your business intact. And so the opposite that I see in that is that inflation can come down very quickly as you get the world's largest factory producing again. And, frankly speaking, wanting the business now, it changes the supply chain very quickly. Yeah. So now you got 600 F-150s on the lot and you got 300 on order, and the numbers start to come down, and interest rates track that.
You make an interesting point too, because I think in that process you also get the emergence of other competitors like India, where you've got Apple now moving out of China and into India, right? And so ideally that further reduces cost because of competition. And sorry, I cut you off there, but COVID has had a lot of unintended consequences, and I'm fascinated to see some parts of the economy reducing jobs and still with that fear. And then yet I'm hearing from both of you guys that it's like, no. We need to keep going, because on the other side of this thing is going to be a great load of opportunity.
Well, and sometimes, again, it's news versus reality. Yeah. Companies, having owned several, often take the opportunity of a crisis to look at their overheads.
Blood in the streets.
Well, you take your overhead and you say, well, 20% maybe isn't that effective these days. Is that industry related, or is just simply the fact that it shouldn't have existed anyways?
That's like Starbucks. They did that.
Yeah.
They cut a bunch of their locations as soon as COVID happened.
Yeah, I mean, you can look at overinflated wages, you can look at shortages, but ultimately an organization takes the opportunity and says, look, now's the time to reflect on what we're doing and do something different. And those cuts come out as big negativity, signs of recession. But at the same time, I think the U.S. jobs report created 580,000 jobs. So there's Google employees or Apple employees that maybe are shifting to something different. Yeah. However, when you have 580,000 jobs being created, it's not as if they're moving into a market that has high unemployment. I think the U.S. is at 3%. So that's a pretty low rate of people looking for work.
Well, and we're at 4. Right?
So I think, again, you got to be forward-looking. And so I'm pretty bullish on the market as I look at it and say, hey, what are the opportunities? And I'm same as Ryan. When I was younger, you get caught in a market and you look at it and you say, darn, I should have bought the dip. 2008 is a perfect example if you look at what was going on with housing prices and things like that. Totally. So I see it as an opportunity. I think people got to dig a little bit deeper in terms of what the facts are, or what's going on.
And I also think in terms of, because I think a lot of people get caught up in what they want to happen too, as opposed to what is actually happening. Yeah. And that's a large part why I wanted to have this discussion, because this is, the conversation we're having ultimately is about what you guys are seeing firsthand. This isn't... there's no agenda here, right? And I think that's important to recognize. This market is forever changing, and I restoring confidence so that people can take advantage of the opportunity that currently exists. I mean, it's likely that if inflation continues its downward path, we might see a bank pivot here at the end of the year. It'll be very interesting to see what happens on the other side of a bank pivot, right?
Yeah, I think my opinion on it, the bank's always backwards looking, not forward looking. So you can wait for the bank pivots and follow it. Yeah. To Dan's question, does interest rates impact business? Absolutely. If you're going out and you got to borrow money, whether you're buying equipment, whether you're looking to buy more assets or looking to buy land, borrowing rates impact what you do. Shortages on the same side do that as well. But again, you relook at where your capital goes and you find other ways to do it. I think businesses that have proven to come through ups and downs, rarely get overly impacted. They just find different ways to do the right things. And if the market shifts, you look at different ways to invest.
Well, yeah, I find it fascinating. It's like the media will tend to always spin and pull out the negative, as they do. They'll cherry pick. And yet when you actually talk to people in the industry, it always seems to be the opposite, right? We're talking here about doom and gloom on the television, and yet here we are talking with PCL, who's saying never been busier. Yeah. We're talking with Ingo, who's been through probably 4 or 5 cycles, saying super bullish. You know, the people who live and breathe it are saying, guns a-blazing, we're moving forward here. You know, it's not the end of the world. So it's very interesting to take 2 perspectives, and you always want to talk to the people, like the purpose of this, that have their boots on the ground.
Yeah, and I mean, from our perspective, we see a lot of the data that comes through the real estate board, right? And we have identified, we've thought for some time now that we're kind of humming along the bottom here in many ways. Not calling the bottom, I won't do that, but at the end of the day, I don't know if there's too much left in terms of where we're at. When you also consider 800,000+ people came to Canada last year. Mm-hmm. Those people are largely going to end up in Montreal, Toronto, Vancouver, where all the jobs go, right? Or Kelowna, where you've got these fastest expanding cities. And then you've got the infrastructure being invested to handle that. So there would have to be a complete meltdown of our economy for things to stop growing in many ways. And then you got to look at, the rest of the world too. And it just is far more volatile than where we are. Right. And I mean, I don't have to talk too much about that. We all know what's happening in Russia and other parts of the world. But that makes, again, Vancouver and probably BC as a region a very attractive place for people all over the world to come, even if we're looking at a 2-year ban for buying homes. Right. People will come here, rent, wait their moment, and then get involved. Right.
Those kinds of things are noise again. Right. That's political. Situation, in my opinion. You say, okay, I'm going to put a 2-year ban on foreign investment. What percentage of the market is it?
Like 1?
Yeah, so that's a sales pitch from a politician that wants to get reelected. It has little or no impact on the economics of real estate. And besides, people who truly want to invest in things, they find other ways to do it anyways.
Of course. Yeah.
So that's just my opinion on what that does. Yeah. And so, I see the market as being lots of opportunities in them.
Yeah, you can almost simplify it too. Like when you look at all the infrastructure spending, you look at the population growth, you look at the job needs. Like I'm sure you guys are very similar. Like we can't hire enough people. Yeah. Right. So when you put all those things together and then just look at the housing shortage in the province, like it just doesn't make sense that if there is a dip, it's not going to last long.
Which is what we've been saying for months, right?
So I always felt it's the time to strike now. Right?
I agree. We also look a lot at the market in BC. We look at Kelowna and we look at Vancouver. We forget about what's fueling electric cars and how they're going to be powered, where the supplies come for these infrastructure builds. You look at mining companies, for example, and the investment and the prices that those core assets are doing in copper, things like that, and the message to the world about trying to shift too quickly even out of oil. Reality is we got to shift away, but it's not going to happen overnight. So BC has a lot of what I call unpublicized assets in the north and even in the South Okanagan and things like that are driving off of the infrastructure growth and things like electric cars. That dollar eventually flows back into the province, and you look at places like Williams Lake, which is my hometown. I mean, they have a need for 850 houses.
Wow.
So the supply chain shortage in those kind of markets, as people continue to try to migrate, from Vancouver to other places, they're not spoken about a bunch because Vancouver is a big market, but they're pretty significant if you look at what's going on in many of those places, actually.
It emulates a lot of my investor clients who are looking for residential property, and of course they're looking well outside of GVRD because they want cash flow, all the way up to places like the northern tip of Vancouver Island. And I talked to local agents there, I talked to property management, and I have yet to find a place in BC that has more than, let's say, 2% vacancy rate. It is just tight, provincially wide. Everywhere you go, small town, medium, big, anything.
Yeah, which creates a lot of opportunity. And you're right about the cash flow. I mean, the dollar is lower, but if the demand is there, then the return on your investment is pretty strong. And you can't build that quickly. Like Ryan said, where do you get the people?
Yeah.
And that's where the opportunity comes in, right? Where that's why I see a growth surgence. And again, to me, it's all mentality. We've been through COVID and then through interest rates. So we've spent 36 months being told everything's coming to an end. If you look in hindsight, then none of that's true. We're still sitting here at a table. We're still talking about infrastructure projects, and we're still making investments. And people are pretty flexible when it comes to finding ways forward, right? So
speaking of which, if I gave each of you $1 million, okay.
I'll take it.
I'll take it too.
No, okay, all right. That's not where I was going with that. I'm not, with a purpose. Hear me out here. I give you $1 million, and you can go and invest that in the province, and then you get $10 million, and you would invest that in the province. So, where would you take your $1 million, and where would you take your $10 million?
Go first, Ingo.
Oh, I knew you were going to hand that one off.
Is this a straight purchase, or can they leverage loan to value with a loan?
No, I like the idea of having $1 million. That's what you get, right? And 10 million, that's what you get, right? What are you doing with that amount? Because I mean, yeah, you could leverage 10 million into 50, but let's talk about you've leveraged to 10 million.
You know, I think if I look at $1 million investment, I would look at some of the smaller growth markets that maybe aren't quite as sexy on the appeal. Places like Williams Lake, places like Prince George, but I would look for inventory shortages. So where they truly have growth in population, those places have pretty stable population, but their shortage of inventory creates a really strong opportunity for a return on investment and growth. Yeah. And $1 million can go a lot further in those markets than it does in Vancouver.
Big time.
You know, you talk about $10 million investments, you know,
build another racetrack or
well, one at a time. So yeah, if my cousin Trevor was here, definitely build another racetrack. But you know, I am a big fan of the Okanagan. All the way up to Kamloops, I see lots of opportunity in quality of life and living. I see the transportation connections that make it easy for people to move there and move around. You know, COVID's upside, it probably moved the cycle of working in different environments up by about 5 or 6 years because we had to overnight go to an environment where it's okay, everybody's staying at home, figure out how to get connectivity. If you look at stocks like Zoom and things like that, which changes those kinds of markets because now employers had to adapt very quickly to the fact that, you know, I may be working in Penticton today or Ryan may be in Kelowna, but his job's still getting done. And to me, where I see that growth and that opportunity, if you have $10 million to invest, it's in those kinds of markets. It's not to say that Vancouver isn't a great investment as well.
But you need more.
You need more. You didn't ask a $100 million question, so you must have spent it. But that's kind of where I would be looking.
Okay, cool.
Yeah.
Right.
I mean, slightly different angle, and I would say mine is strictly on personal preference and kind of what my end goals are with retirement and whatnot.
Yeah.
So with the $1 million, I would probably take that $1 million and go buy 3 short-term rentals, like in fun areas.
Yeah.
To where you could short-term rent them and try to, you know,
maximize your cash flow.
Yeah, try to maximize cash flow to where it allows you to stop working.
Yeah.
And with the 10 million, I think I would probably try to do a, you know, low rise type condominium type buy that again created a lot of cash flow. I don't know if I could do it in BC. It might take me down to the US somewhere, but to me it'd all be around, you know, some smart residential buys and allow myself to retire younger.
He's looking at me. Knowing Ryan's personality, he's just kidding himself. He's not going to retire. He's doing something different.
Nor can you.
Fair enough. We tried that COVID. It wasn't that much fun.
You get bored. It's interesting because, you know, Vancouver has a huge density issue, right? So, yeah, I guess the next question, as opposed to $100 million, you know, I think the $50 million question, at least in Vancouver for a lot of developers and investors, you know, Vancouver specific is tabling the Plex plan right now. The Plex plan being a blanket rezoning of all the RS single family homes throughout the west side and the east side, and allowing homeowners or investors, builders to take what would be a typical single family home and create a 4, 5, 6, or even a triplex or duplex, depending on how much land they have, without a development application. So just a quick building application. Here's my plans. Away you go. So knowing that, and knowing the extremely sort of old inventory that exists in many parts of Vancouver, I guess for me, I think going that, the single family homes are definitely becoming a unicorn. And I think we're going to start to see either owning a single family home long term is probably a very good investment. But I would also say looking at land assemblies and looking at densification projects, I think is where you're going to see a lot of return on investment in the next decade here. I don't know what you guys think of that, but that's kind of what I'm seeing.
Well, you see it on Oak Street already, right?
Oh, and Canby, yeah.
The whole thing is densified.
Yeah,
land assembly densified, right?
Yeah, growing quickly. I mean, we talked a lot about other markets. Being the senior at the table, I've had a chance to go to lots of places in the globe, and there's some wonderful places around the world for sure. But Vancouver is one of the nicest cities in the world with a lot of flexibility. And there is a lot of population growth coming from immigration. It's, if you look at it, you're an hour and a half from Whistler. You're living on the ocean. It's got a ton of growth, and it's a beautiful city. So I agree with you, Ryan, that it's been too many years where red tape has created the housing cost crisis. Mm-hmm. We talk a lot about interest rates. In reality, red tape has created a shortage in the housing market. When it takes 3, 4, 5, 6 years to get a basic permit and application put through,
it's crazy.
You just can't keep up with demand. And so, the shifts in the Vancouver thinking are encouraging because the demand is there, and it is a great place to live. And if you're going to have younger people living in the area, you can't afford to buy a $4 million family home.
It keeps people in those neighborhoods, right? Which I think is a big part of the community. And we don't want to displace people, but we also have a problem with affordability because of the red tape that has taken forever to build the homes and the stock that we need. And then you look at, immigration numbers and you're like, this isn't going to work out very well.
And when you couple that with the potential of material goods coming down again, there's a lot of opportunity for builders to offset. You take away the red tape and the staggering cost of tying up that capital for such a long time, combined with the fact that materials are coming down. Your interest rates went on a commercial loan from 3 to 5.5 temporarily, but take out all those other costs and the spreadsheet will balance things out very quickly, which is why you're still seeing a lot of activity in the acquisition of land assemblies and things like that, and changing the neighborhoods, like you talked about, Oak Ridge and those things. You drive by there and it's a spectacular build, and it'll change things. The other thing is transportation, right? You look at the hubs coming out of the SkyTrain, and the fact that people want to live in communities, the UBC line. Look how quickly Brentwood came up and what's out there. So
Brentwood's still selling pre-sales at like $1,600 a foot. It's crazy.
Blows my mind.
And mine too. Okay, guys, a few more questions and then we'll kind of wrap it up here. But we've talked about a lot of the positives that exist in Vancouver, why we're bullish about it, and not just Vancouver, but the region, including the Okanagan. Let's maybe talk about what some of the risks could be before we end the conversation, because it is one thing to look at it from a complete bullish and getting excited side, but these corrections do take place. What are the potential landmines in the short term that you see, or do you see any?
Well, I think for me, it's tying up capital with a plan and it not coming to fruition, right? Like, how long do the rates stay where they're at, right? Like in my personal situation, I bought a pre-sale, right, with a plan,
knowing rates are coming down.
With a plan that rates are coming down, and when that happens, I would make my decision whether or not I keep or sell, type of thing, right? So I would say what would stifle me is if the rates stayed high, and that would probably influence my decision one way versus another.
So if inflation stayed pesky and didn't come down, and the Bank of Canada maintains rates or arguably pops them up a few more bips, that would change the outlook.
It changed the outcome probably, right? And I think there's a lot of people probably in that same spot.
Yeah,
a lot of people in that same spot.
I would agree.
That's probably the one risk that I see on a micro level.
Yeah.
Well, Dan said I've been through 4 or 5 cycles, but I think it's only 3. But I see risk a little bit different. I think being in business and being in development and being in investment, I think the risk has proven over 50 years to be unpredictable. I don't think anybody truly predicted the dot-com crisis, no matter what people say about, I saw it coming. Nobody predicted the bank collapse in 2008. We didn't really see the COVID pandemic coming and shutting down the world.
Or oil going from $1.30 to $7 a barrel.
Yeah, so, I think the risk is more in your mentality and doing your research properly and not stretching yourself to a point where that bump, whatever bump is, comes your way. Because inevitably there will be some form of bump and there will be some form of upside. Whether that be a technology change, you look at the growth of AI right now and everybody's saying it'll change jobs. In one way it's empowering people, in the other way it's taking potential jobs away. So I see the risk as people getting too excited and being overextended.
Right.
And so you always have to know that there will be ups and downs. You rarely time the bottom, you rarely time the top. But if you're not stretched out so far that you can't handle a blip, then you'll be fine.
I like that. So it's really about the biggest risk ultimately is your mentality and not doing your homework. And then behind that, if you are investing and doing so in such a way that you can't handle a downturn, then you shouldn't be investing. Ultimately.
Great point.
Yeah, that's a valid point. There's many ways for people to invest in. I mean, you get GICs these days at 5%.
Yeah.
So that's a good investment for lots of people. It's about your own
risk tolerance
and also about how much you can control. I think people like Ryan and myself and you guys are into industries where you have some control over what you can do and what you see coming down. So it's a valid point to say, look, you got to understand your own tolerance.
Yeah.
But the world's not coming to an end, so that's why I'm bullish.
Have a strategy. It's not gambling, right?
Yeah.
Don't gamble with investments.
Yeah.
There's always risk, but there's a difference between taking risk and gambling. Have a strategy and take calculated risks.
Yeah, on a personal level and at that corporate level, right? So I think it's probably a good place to end there, Dan, unless you want to pop.
No, that's perfect.
There.
Wise words. Sometimes you don't need to overthink these things. Don't put all your eggs in one basket and get your, do your research, do your due diligence, surround yourself by people that have done it before, surround yourself with really like-minded, successful people, and that can be part of the path to success.
Don't take the news as your cues.
That's actually a really great point that Dan made. One of the things in today's connectivity world is you can surround yourself with a lot of knowledge and respect those people's knowledge, and that helps de-risk you actually.
Mm-hmm.
Yeah. I mean, I can think about how many dinners you and I've had, and the whole conversation goes to investments. And right.
Yeah, it's helpful for everybody because you get different perspectives from smart people who are seeing things from a different angle, and that helps you look at opportunities and understand where your risk might lie. So that's a really great point, Dan.
Yeah. Cool, guys. Well, listen, it's been an absolute pleasure, Ryan, having you on for the first time. Ingo, having you back. Glad to hear that. COVID wasn't as bad as it could have been for you guys, and the mental fortitude and perseverance to look beyond the headlines, to look beyond just the short-term cycle that we're being through, I think is deserves some sort of I don't know. It's rare to see that when it's very easy to fall into the pattern of thinking of, I'm just going to sit back here and be safe, right? So I commend you for doing that, guys, and thanks again for coming on.
Yeah, likewise. Thank you.
Yeah, thanks for having me.